Welcome back, and we'll be settling for the details. Remember, you can stay interactive on all our social media platforms. That is Joy Business GH on Twitter, Facebook, and all the other platforms. Let's now settle for the details. And government has provided about 1.5 billion cedis as partial support for clients of the collapsed fund management firms. Now, this is what Joy Business has picked up from persons with knowledge of this transaction. There's, however, be left to 6.5 billion cedis remaining funds at the risk that will be burdened by the liquidator. Earlier on, I tried to put together a wrap of these details, and I have more. Accountant firm PricewaterhouseCoopers, which has been appointed by the Registrar General, is expected to act as the receivers to help validate claims from the investors. It is after this that the receiver will then commence the part payment for clients of these firms. However, this will go to only those who have had their claims validated. We're also hearing that the payment to be capped at 20,000 Ghana cedis for each investor, and the rest will be paid later based on what the registrar secures after liquidating the assets of those firms that have had their licenses revoked. According to the Securities and Exchange Commission, the 53 firms are holding about 8 billion Ghana cedis worth of assets belonging to these investors. So, would the about 1.5 billion Ghana cedis that have been provided be enough for the about 56,000 clients, even if it's part payment? Or the plan is that the registrar will be able to quickly recover enough assets to support the payments later. Some also saying that depending on how things will look like after the first round of payments, the cap amount would then be increased. Now, the Securities and Exchange Commission has given the firm assurance that the remaining fund management firms are safe. Now, this was after actually revoked the licenses of some 53 fund management firms in the country. The Commission has, however, maintained that it may not rule out withdrawing another license if it's needed. Let's hear from the Deputy Commissioner.
Would encourage people to remain calm because panic withdrawals obviously can have knock-on effects. What we have done is to really clear out the troubled firms. The firms that are remaining, obviously, they have different kinds of portfolios, different business models, and in the course of business, we will look at their operations. We've looked at them leading up to this. We'll continue to do our supervisory activities. And as we said, we give people an opportunity. We give them a chance to explain what they are doing. We hear them when they have issues, when they come to us. Oftentimes, we even go there and we raise issues in our inspections. So there's a balance, and regulation is an ongoing activity. You don't stop at some point, but we don't expect to do such a large announcement.
If it will happen, maybe 2, 3, but it could happen. It's a never say never situation.
Well, I mean, to the extent where we can say that the remaining operators are licensed and they meet our requirements, yes, we are not in the position to do this, let's say, tomorrow.
Tomorrow. But let's still stay on this sector because the Registrar General has also indicated that she will take steps to ensure that things are done right and put things in place.
The Securities Industries Act itself has provisions that have enabled us to lock down all those firms, all those fund managing firms. So currently, none of those firms' offices are opened, to enable us to protect the assets of the creditors.
This is Marketplace, and stay interactive on all our social media platforms at Joy Business GH on Twitter, Instagram, and on Facebook. The first tranche of the Sino-Hydro deal has been released. Now, speaking in Accra on Monday, November 11, at the Jubilee House, Vice President Dr. Muhammad Bamia indicated that projects under the agreement have also been grouped into lots. Now, the review and the approval is ongoing. But what will be the impact of this on the economy, especially a day before the budget? How will this also impact on government's expenditure plans and efforts to improve funding for some critical expenditure and capital projects? We get onto the line to speak to economist Professor Godfrey Bobkin. And Prof, we thank you so much for your time and we appreciate it. So if you're on, let me first ask you, What do you make of this Sino-Hydro deal?
Thank you very much, and good afternoon to you, our terrorist viewers. I think there's been a lot of discussion time past with regard to Sino-Hydro, the barter arrangement, and all of that. I think the bottom line of this whole thing is that government doesn't have the fiscal space to do infrastructure financing through the debt market. And because of our debt stock and then other debt sustainability indicators, a way to offset that burden is to do this kind of, so they say, innovative financing arrangement, call it barter, so it doesn't have to be loaded onto our public debt stock immediately. But implicitly, we are the ultimate risk bearers. But I think that to date, I'm not too sure many of the issues that were raised have been resolved. For instance, the value for money in the bauxite transaction, the capacity of the Vaco itself to be able to deliver on that, and then the what price. There are so many issues. I mean, the energy efficiency level at which Vaco can produce, and then for us to be able to draw down that facility, there are issues that have to be addressed. In fact, environmental and social impact analysis in the area and all of that, I'm not too sure that I've seen satisfactory response to many of those issues. But it looks to me that from government perspective, because of the huge infrastructure deficit, they came into office at a time when the macro variables were really deteriorating. They didn't have fiscal space in order to do infrastructure financing because also domestic revenue envelope remains flat. So, for instance, 97% of every city tax revenue that we generate as a country goes to just two line items, compensation of employees and then interest payments. So it leaves government with practically nothing to do infrastructure financing. So for government, I mean, regardless of the cost and the concerns, they have to be able to show something that they have done some infrastructure and all of that. So I'm sure that is driving the government perhaps along this.
But Prof, let me also get your thought. I mean, the immediate relief and the long-term challenges. Right now, we need so much money to deal with the infrastructure gap and also with respect to our deficit. So we should be excited by this, right?
Well, to some extent, you can say yes, but the issue is at what cost? And then we are also looking at the natural resources. So in terms of the excessive revenue monetization, debt collateralization, and all of that. So it's a balancing act that we have to be able to manage very well. So at what cost? How were these projects selected? The necessary evaluation and all of that. We have had a lot of issues with Chinese contractors in this country, and that is a fact in terms of the quality of the work and all of that. So these are issues that I want to believe that government will have to take a critical look in terms of durability of even the physical infrastructure that is going to be delivered. What is actually going to be on the ground relative to what is stated on paper. I mean, these are critical issues. We all do agree that the huge infrastructure deficit imposes further restrictions on the growth drivers of the economy. That's a fact. But we have to be able to devise fiscally responsible strategy in bridging the infrastructure deficit, because the cost at which you decide to finance the infrastructure deficit itself will have implications for productivity growth. And I believe that government is desperate now because it's been 3 years or so in power. I'm not too sure in terms of physical infrastructure, there is much to show for. And the call from all over is that something has to be done. And we don't have the fiscal space. We are unable to generate sufficient tax revenue. Tax expenditure is very high. I mean, at a time when we don't need that, we don't need to incur that much. But we are doing that. And government hasn't been able to demonstrate that we'll be able to reduce the huge tax exemptions that we give to multinationals in excess of $2 billion. So if you look at how much Ghana loses annually through tax expenditures or tax exemptions, it's more than the entire Sino-Hydro deal, $2 billion. We are losing more than $2 billion annually.
Prof,
I think, look, government in its hurry to meet the IMF exit conditionality sent an exemption bill to Parliament. But what has happened now? We are not too sure what has happened to the exemption bill. And the country is losing billions of dollars
Prof,
multinationals that are in tax-paying positions. If you look at how much we lose relative to how much we have paid on free senior high school, I mean, it's nothing.
Prof, tomorrow's the 2020 budget. Let me get your thoughts on the budget. 2020, should we be that excited about it, or more cuts going to election year, more expenditure, expectations, 2020 budget?
Well, you know, in an election year, government is more vulnerable in terms of managing expenditure. So there's a high probability that we may end up with a slightly higher deficit because in an election year also our ability to enforce greater tax compliance is also low because government doesn't want to offend the citizens, and GRA is highly politicized, so even if they want to do something, it is often viewed as the government and all of that. So and then don't forget that all the election-related costs from Electoral Commission will be loaded in that fiscal year. So all of that works together to perhaps elevate the deficit. So, but look, this government or successive government, we have not been fair to this country in terms of blocking the leakages in our revenue envelope, and that is very sad. And look, the president himself talked about it during the State of the Nation address, that Ghana loses so much through tax exemption. His response was that a new exemption bill has gone to Parliament. So I'll be looking forward to see in the 2020 budget how government intends to tackle this exemption regime. Okay. Because we could save so much and borrow less.
Okay.
Okay, and then also, look, when you look at Ghana's tax effort, we are not asking for too much from government because we are currently doing 12.6% or approximately 13%. Our peers with similar economic challenges, similar informality and all of that are doing up to 20%.
Okay.
So it means that we could actually increase our tax revenue without burdening the faithful few.
Okay, Prof, thank you so much for your...
Then I'm not too sure we're going to make a lot of progress going forward.
Prof, I thank you so much for your time, and we'll all be looking forward to that interesting budget. The first budget post the completion of the IMF program by government and also the last for this particular administration. Let's talk about finance-related issues, because the Finance Minister, Ken Ofori-Atta, is optimistic that a new guideline for repurchase agreement covering bonds would help reduce government cost of borrowing. The new guidelines would help better regulate purchases of bonds, government paper securities, and the Eurobonds. Now, speaking at the launch of the guideline for repurchase agreement and the Ghana fixed income market in Accra, the minister said that this should help reduce the risk associated with lending to government.
The benefit of a reduction in financing costs in the economy cannot be overemphasized, as there will be less strain on the public purse. Lower interest rates will spur business investments and household consumption towards higher income growth rates. Mr. Chairman, the launch of these guidelines comes at a good time as Ghana positions the economy to support the recently signed Africa Continental Free Trade Agreement, with Ghana hosting its secretariat. Government believes that a well-regulated and liquid financial sector helps in achieving not only our strategic objectives, but pushes Ghana further beyond aid. A well-regulated and improved repo market will provide market players with a much-needed liquidity by temporarily converting liquid assets into cash to meet their financing needs, putting an end to outright sales which could adversely affect their books should the prevailing market conditions turn against them. These guidelines officially endorse the GMRA as the industry standard agreement for the repo market in Ghana and will serve to strengthen the Bank of Ghana's ability to use repos as a tool to more efficiently implement monetary policy. The GFMI platform, as well as the GMRA-based repo that we launched today, fit very well in our medium-term debt management strategy of developing the domestic debt market to serve as a sustainable source of government financing. Along with GFIM, which is facilitating secondary market trading of fixed income securities, we do look forward to a more robust, liquid, and efficient bond market which will translate to a lower cost of borrowing for government and corporate entities who issue debt in the GFIM market. As you know, we have some markets for 208 billion CDs worth of debt, and next year we need to look at a way.
The governor of the Bank of Ghana, Dr. Ernest Addison, on his part noted that the initiative would help improve market confidence.
While the volume of overnight interbank trading among the universal banks amounted to 27 billion CDs at the end of the third quarter of 2019. These trends show the huge potential of repos as reliable and cost-effective source for the short-term funding for market participants. It is against this background that the Bank of Ghana, together with other stakeholders, have decided to introduce a JIMRA-based repo market in Ghana. Ladies and gentlemen, the guidelines being launched today is based on the standard 2011 Global Master Repurchase Agreement. All the directives in the guidelines are binding on eligible counterparties and will serve as the regulatory guidance for repo trading going forward. The key features of the JIMRA-based repo guidelines include the absolute transfer of title to the buyer, an expanded list of eligible instruments which would promote a more liquid repo market, and expanded eligible participation to cover not only banks but SDIs, securities dealers, corporates, and high net worth individuals, and the requirement for margin maintenance requirements, including features such as repricing, substitution of securities, and daily margining of collateral, and a margin notice deadline, which serves to reduce the credit and liquidity risks associated with the use of repos. To provide further guidance, a Ghana Country Annex has been designed which specifies the supplementary terms or conditions to the JIMRA to cover sell-back and forward transactions, and made amendments to paragraph 2, 5, 10, 17, 19, and 21 to the JIMRA. There is also a Ghana Agency Annex to cover transactions where at least one party is acting on an agency basis.
Let's talk about oil, because Talu says he is making progress on giving out his gas to government instead of flaring it. Let's hear from Kukwa, who is Executive Vice President of Talu.
So I think the good news is that there is a conversation going on. Government is well aware of some of these challenges. There is no question that everybody understands that the use of gas is better, more economic, and cheaper than the use of liquids, for instance. So I think there is a willingness to find ways to bring that gas on. But as these things tend to happen, we've had a number of arrangements that are, on the face of them, are not well coordinated. So Tullow and the Jubilee partners are free to the country. ENI costs so much. West African gas costs so much. And the current gas infrastructure does not allow Ghana Gas, for instance, to take all that gas and supply it to the country. Okay, so there is a conversation that is going on, and how do we optimize the use of all that gas? It's ongoing. I don't think there's any solution. I think the good news, really is that the government itself is quite keen to find solutions.
What has been the communication from government to you why they are not taking your gas still?
Okay, it's really quite simple, and I talked about it earlier. The Tullow and the Jubilee Partners gas is associated gas. If you don't produce the oil, the gas doesn't come. This is different from non-associated gas, where you actually produce only gas. And so when oil was first produced, gas was not marketed as firm and reliable. And so, you know, like all supplies of commodities, you have your firm supply, you have your interruptible supply. We know is that there's domestic supply of gas and there's international supply of gas. From that point of view, Tullow's supply of gas is domestic, it's in the country, as opposed to West African gas pipeline that is coming outside the country. And I think there is a feeling that whatever we do, we should use our own gas first before we use other people's gas.
Well, not too soon, we have to draw the curtain down on Marketplace. But I know tomorrow's the budget. Let's keep the conversation ongoing on our various social media handles on Joy Business GH on Twitter, on Facebook, and on Instagram. What do you expect? What is in for you? What the finance minister should be talking about tomorrow when he appears before Parliament for the 2020 budget. Let's have a chat. Let's talk. This is Marketplace, and have a good afternoon.